Hello, well, thanks for joining me on another edition of Real Money Stories. Interesting guest this week. They're always interesting. Lucy Mullins.
Hello, Jason. Nice to meet you.
Good. Very impressive book collection there. Won't ask you to go through them all, but you clearly are someone who's got a lot of knowledge and wisdom. So we're going to hopefully tap into some of that today. So before we get into hearing about your sort of money journey, do you want to just tell us what you do for your day job?
Absolutely. I have to just say, it's always a worry though when people notice the book collection. You don't know that I've read any, so hold fire on the wisdom till we've spoken. I'm the co-founder and chief operating officer of StepLadder, and we are a company dedicated to helping people buy their first home faster and achieving their financial goals by working together. And I'm sure I'll tell you more about that as we get into the chat.
Yes, and that was something that was very interesting to me because, as you know, I've been around a long time in personal finance, and since I retired from personal advice, I've made it my mission to try and just help demystify money and just help people feel a bit more confident. And buying a home for many young people seems like that kind of dim, distant, it's too difficult, I'm never going to do it, and the victim mentality takes over, and I can understand why, doesn't it? And they feel it's never going to happen. So it's exciting to hear of a startup that is trying to address that problem. So, what was it that sort of that inspired you to start that business? Perhaps we should start there. You know, what was it that really inspired you to sort of get this business off the ground?
Absolutely. So I can't take the credit for the brilliant idea that is StepLadder. That's my co-founder, Matt, who actually saw this model being used in Brazil as part of his graduate work back in sort of 2005-6. And actually, this model, some of your listeners will recognize it, has been used around the world for hundreds of years. Matt saw it in Brazil, where people were coming together in groups and pooling their money, and each month would take turns to take the total amount. So it goes by different names. In Brazil, it's called a consorcio. It's called something like a chit fund in India, or a committee, or an ajo in parts of Africa, and a partner in the Caribbean. And Matt was looking at it and thinking, gosh, this would be an amazing thing to apply to that huge problem of buying a first home, and raising the deposit actually is often the hurdle that most people find just a bit insurmountable, really. So he set up StepLadder in 2015, and I got introduced to him in sort of mid 2016, and just absolutely loved the idea. Buying my first home was I just remember it being such a huge step, Jason, and it just felt like a real grown up. But I was back in the days when you could get 100% mortgage. So, it made it an awful lot easier. And then any money that I had saved wouldn't have been enough for a deposit, but that went on, nice things like sofas and things that you need to put into the house. So I felt very lucky to have done that, and could just see the new generation coming through not being able to get that deposit. So I love the social mission of it. And I love this sort of collaboration cheerleader side of it, where, you're sort of motivating somebody on the journey. My background's actually in personal training and health. And I sort of saw this idea, which I've helped shape at StepLadder now, into being like a sort of personal trainer for your money, motivating you on the journey to put that money aside each month, holding you to account, and giving you some discipline.
It's interesting because I do hundreds of financial wellbeing virtual events throughout every year, right? So I do hundreds of them, and the one that what I really like doing is when I can share people's stories, because especially when I do the debt buster session, when I talk about how you can get out of debt and get ahead. And as you say, sometimes you need that coach, that friend, that sort of sense of motivation and support that you're not alone and that you're going to do this because it's a big thing to do. So okay, so the business now, that was the sort of reason you got involved. You loved the idea. You sort of had your own success with buying a house. You understood the difficulty. So take us back to your earliest kind of money memories. What was it like growing up where you were? Was it opulence, or was it really tough?
So it's really interesting, Jason, because growing up, I never wanted for anything, and don't think I had any real concept of, which families or friends were from wealthy families and which weren't. We had a lovely home in Oxford and a beautiful garden. And actually, as I've grown up, I've realized that my parents' combined income was a fraction of what I was earning a couple of years out of university. And that's not to say I've done amazingly well on some sort of investment banker salary. I haven't. It's just that my parents were both in fantastic jobs, but industries that don't pay well at all. And actually looking back, I think, oh my goodness. And I've spoken to them about it. I say, oh my goodness, what you were earning, and you brought us up, and I got to go on the school ski trip, and we had all these amazing things. How on earth did you do it? So it's a really sort of just distorted view, I think. And my parents did an amazing job of making a little go a long way. And so one of my earliest money memories is my mum telling me about after they got married, they didn't buy anything. You know, they lived in a small village and it was, oh, someone's got an old sofa, someone's got an old fridge. They just didn't buy anything. So this idea of kind of my generation coming through and buying a house and saying, oh, well, I need to go to John Lewis and get this, or, you know, even IKEA and buying something new was kind of horrifying. It's like, why do you need new things? My parents actually paid off their mortgage in 10 years.
Really?
Which extraordinary. Yeah, and looking back at that and understanding what I do about money now, it's extraordinary. And they'd kind of pushed themselves to buy a house that was bigger than the average couple of their age at that time, and definitely well above what they were earning. But they said, no, we want to get this house and we want to pay it off. And so they spent nothing basically for 10 years. And then they had me and my sister. So yeah, I grew up with a very interesting view of money, sort of how disciplined you can be.
I've got to get your parents on the show. They sound amazing. They sound rock stars with money. So let's just get this
They are.
clear. They were modestly paid, but had good jobs, so stable jobs. There wasn't like breaks in income. They begged, borrowed, and not stole, but begged and borrowed and repurposed and took anything that was going, sort of
Community
being.
sharing and
That's
collaboration,
it.
I
That's it.
think.
Yeah,
Yes.
yeah. Looking in skips. I know. We've all been there. And their big priority was to own their home. They stretched themselves a bit and then they paid it off in 10 years. Unbelievable. So what did you learn from those early experiences and the example of your parents about money? Did you go completely the other way? Did you just have good times for years, or did you follow in their footsteps?
A little bit. It's really a mixture of the two, actually. I think at the core, I've got good money discipline, but I do spend, even now, quite a bit of time feeling a bit guilty because I am far more extravagant than my parents were or even are now. So I think I've got a really good grounding, and even when I think I'm being bad, if I compare myself, you know, which you shouldn't compare to other people, but you sort of naturally do. When I look sometimes at how other people spend money, I think, oh, actually, I am quite frugal, even though you know, in many ways I will splash out on, you know, my thing is blow dries or having my nails done when we're allowed out, clothes, shoes, that sort of thing. So yes, I think it's a bit of a mixture of the two, but I think that core grounding in seeing how far you can make money go still comes through. So for example, actually, I'm wearing a really nice pair of boots today that I bought from a charity shop last week. And they are £600 at the moment in John Lewis. I've known this brand forever. They're beautiful. I would never spend that much money on a pair of boots. And I bought them for £30 from a charity shop in Clapham yesterday.
Unbelievable.
So, yeah, I
Well,
think that shows my frugality. I love nice things, but there's no
quality.
way,
Yeah.
absolute quality. But
And that's an interesting point, Lucy, because you know, I'm 51, right? So I've seen a lot of life and ups and downs. But one of the things that I think you're illustrating there is that there's nothing wrong with having nice things, nothing wrong with having quality, nothing wrong with having fun, nothing wrong with having things that make you feel better about yourself, as long as A, you can afford it, and B, it doesn't put you in a precarious position when the proverbial what's it hits the fan, because it will do, won't it? It's as sure as eggs. You buy that house, the boiler goes wrong. You know, you've bought that brand new car and suddenly you lose your job. Something will go wrong. So, okay, so when you were growing up then, you had this wonderful life. You remembered the skiing holidays and stuff like that. But do you know how your parent did, how did they pay that mortgage off in 10 years and still give you things like skiing trips and stuff?
I think, you know, so to be clear, the skiing trip was a school skiing trip. So it wasn't the whole family went skiing. So my parents, you know, never went on holiday, never ate out, never really drank. You know, I remember, you know, lots of conversations, and I realize this now when I have dinner parties, you know, when you're entertaining and you do your shopping bill and you add alcohol, suddenly, you know, the money goes fast, actually. So that's quite interesting. You know, my parents didn't really drink mulled wine at Christmas, and that was it. You know,
Steady.
lots of tea drunk in our family. There's a
Yeah,
lot of wisdom in a cup
yeah,
of tea.
yeah.
So I think, you know, it's absolutely, there's something for me about being very content with what you've got, being content with each other's company, being content pottering around the garden, you know, going out for a cup of tea and a piece of cake at a garden centre is still one of my favourite things to do, because that's what we do as a family. And I'm looking forward to going home for Christmas. And obviously we probably won't be going out and about this Christmas, but normally we'll sort of bundle up in the car and go and do that. And actually that's an absolute treat, really. You know, it's more about the company and the quality of the company. And I think, I'm a coach, as well as my work at StepLadder. I'm a professional coach, and I think, one of the things that we struggle to do as humans is if we've got unmet needs, we try and compensate for them in another way, right? And we're always looking for this in coaching, what is driving that behavior? And I think, if you're lucky enough to grow up in a loving family, you've got those relationships, and actually there's not so much need to sort of splash cash on lots of things. You don't need a fancy holiday, because actually if you're camping in your garden, you're going to have just as much fun.
Well, I think the point you're talking about there is intrinsic versus extrinsic motivation. So we know that if our needs aren't met as a child, if we're not feeling secure and loved, and that we don't feel enough, that we'll fill that with a need for acceptance by other people. And often, not always, it can manifest itself in spending or overspending and trying to do stuff to impress people who don't really care about us. And there's an interesting episode, Emmanuel Escuto, who's just come out, that episode, and he says, those people I was trying to press with my spending with the money I didn't have, he said, they were not there when the tough times hit, right? They were nowhere to be seen. But the people who love me and like me for who I am, they were there, come what may. They didn't care what I was spending. So that's a really good point. So did you go to university, or did you go straight into the workplace?
I went to university. I did a sport and exercise science degree many years ago.
Right. Okay. So we can't. So basically, it's interesting. There's a lot of research that shows that people who look after their mental and physical well-being tend to be better with their money than people who don't. And we don't know if it's cause or effect. So in other words, if people who are good with money look after their mental and physical health, or people who look after the mental and physical health, but there is some sort of connection with that, isn't there? That tendency to look after yourself.
I think it's one of the personality traits of conscientiousness that comes from the kind of big 5 personality inventory. Certainly from the stuff I've read around, if you have that conscientious trait for being able to schedule things, being able to do things when you say you are, you probably will go to the gym, you probably will meet your friend, you will buy healthy food 80% of the time, you probably will put money into a savings account because you're sort of organized. So yeah. I think that's sort of one of those underlying personality traits that, actually, if you've got that underlying personality trait, in many ways, a lot of the things that give you a tick for sort of well-being, financial, emotional, psychological, and physical, are sort of all done in one go. It's sort of 4 for the price of 1, isn't it? And if you're not as conscientious, there's so many other great things that come with that, but it means you're maybe fighting a bit of an uphill battle on multiple fronts.
But just because you're being conscientious and self-disciplined and self-controlled doesn't mean you don't have some, off-the-cuff fun sometimes, or you have detours or things go wrong. That doesn't mean we're all goody two-shoes and perfect. It just means that most of the time we're holding it together. Yeah.
I have so many detours and moments of utter chaos. No, I don't want to give you or your listeners the wrong impression. Absolutely not. Guilt is such a funny emotion, and I've been feeling quite a lot of it this year, with COVID, the fact that I still have a job, I feel guilty. And, if I buy something, I think, gosh, what have I bought? I shouldn't have bought that. And should I really have bought that? So no, I absolutely go off the rails all the time. And I think, one thing I've learned with coaching is you should accept the emotion you feel. So you accept the guilt, you don't try and push it away, but equally you don't want to wallow in it too long. So let it come, understand why it's been sent, and then work on through it. So there's no point wallowing in it. But yeah, absolutely. I think, it's like all things in life. It's a bit of a roller coaster, isn't it? The challenges come at you like waves, and you have to sort of overcome each one and then get ready for the next one.
And that's a good point, that none of us are perfect. None of us get it right all the time. I think the key is to keep getting back on the wagon, or keep getting back into the center lane, and keep veering off on the verge or the center of reservation, but just keep in that middle lane. Yeah, I get it. Okay. So what did you learn about yourself and your ability to control your spending and money and stuff when you were at uni? And did you have a job there? Did you work part-time, or did you just eke out your grant or your mum and dad's support? How did that work?
So I had a grant, which was great. I remember saying that, so I did work. I did work. I love working. I've always worked. I trained as an aerobics instructor when I was 16, which was actually a great thing to do. So at university, very sporty university I went to, I quickly set up, I knew I didn't really want to work in a shop, and I'd be a terrible waitress. If I worked in a shop, I knew I'd buy stuff. So I'd want to work in a shop that I liked, like Karen Millen or something.
Environment matters. Yeah, got it.
Yeah, exactly. So I was like, well, then I'll just spend all of my salary buying things if I'm looking at these lovely dresses all day. So I know I've got a weakness for that. So I think sometimes sometimes you've got to put yourself in the right environment. And I thought, well, you know, why don't I teach aerobics? I've got that skill. So I hired the sports hall, and as one of the sports students, I think I could hire it for like £5, this huge sports hall. And then every Friday, sort of early evening before people went out, I'd have about 100 people in there, you know, literally all paying £2 or something to do an aerobics class. But, you know, as a student, that's, you know, 100, £200 every week for an hour of jumping around with a microphone.
And keeping fit. Unbelievable.
And keeping fit. So living the dream. My work at university was great. And I've actually, yeah, I've always taught aerobics up until I became a startup co-founder, and, you know, there isn't really much time for anything else. So yeah, that's I worked, and then consequently I did spend my grant. I did have fun. I did go on holidays. You know, I think, you know, work hard, play hard is definitely a motto for me.
So you didn't come out with an enormous overdraft. You sort of you spent the money that was there. You had fun. You did the earning. You did the stuff that you knew, which was the aerobics instructing. You earned money there. So you enjoyed the whole university experience, but didn't come out with a ball and chain around your legs.
I mean, came out with a big student debt, the student loan. I took the maximum student loan. I qualified.
Deferred graduate tax, please, if you don't mind. Thank you.
Yeah, exactly. Yeah, just pay it off when you start earning. So it didn't feel like a big ball and chain. No, I didn't take any extra loans off the back of that.
So when you first went into the sort of workplace, then when did you feel that you grew up as an adult, if I can say that, with money? Was it at uni, or was it when you first started working and earning what I call a more substantial amount of money? Did you ever grow up? I don't know.
I'm not sure I am. I wonder if coming on a podcast and talking about money is growing up with money. I don't know. As a co-founder of a FinTech and financial,
see it as therapy. It's just you and me and all the listeners.
So yeah, I'm not sure I am growing up with money. Yeah, I think getting my first salary, getting my first proper salary was very exciting. I still remember I banked it at HSBC Corn Market in Oxford. And I know the address and the sort code because that was actually where my first job was as well. So I got a graduate banking job at HSBC on a, you know, what for a graduate was a good salary, not crazy investment banking salary, but, you know, solid salary and a golden handshake to join their graduate program. And I remember when that lump sum of cash landed, I was like, wow, this is the best my bank account has ever looked. So I do remember getting that first salary and then thinking, oh my goodness, this is coming into my account every month. And at the time I was still living at home. So that was quite exciting. But, you know, obviously having grown up in the household that you've heard me talk about, my parents were like, obviously make sure you're putting a lot of that away for when you want to buy a house. So I lived at home for 6 months when I had that job before I moved to London. And then I'd managed to save up enough to sort of get a house with my friend, and we bought our first house in Tooting.
So that came from that original, the golden hello and the surplus, and so you actually made living at home work for you because obviously your costs were lower and your mum and dad gave you a bit of guidance and you still had fun, but you managed to get that deposit together.
Yeah, well, actually, it wasn't really a deposit that was needed because it was 100% mortgage. So, you know, that does give you an idea of how old I am. It was 100% mortgage. But obviously, you do need, as your listeners will know, and if they don't know, they should come and chat to us at StepLadder, that, you know, you need money to pay the conveyancing solicitor, to pay the stamp duty, to pay the moving costs. There's a lot of costs associated. So, yeah, I knew that I needed a little pot of money to kind of do up the house and pay all of those costs. So, yeah, it didn't actually need a deposit, which was great. So it was much easier to say, you know, it's a much more realistic amount of money to save as a 24-year-old.
And of course, what you need is an emergency fund wherever you buy a house, because it's not just a deposit and all the money for the thing. If you have not got an emergency fund of at least 3 months of your core living cost, then you're in the poo. You're gonna end up taking on debt because something will come at you that you don't expect. Even if it's not losing your job, it could be just an expense. And that's what a lot of people don't realize. And you've got to be in that position. You've got to be ready to buy a house. So that brings us on really. So how did you what possessed you to give up the cushy HSBC job, if I can use that term, not cushy perhaps, but, you know, the solid, you know, blue chip job, to go and work in a financial startup? I mean,
corporate life is not for me. you know, I look at some of my friends that stayed, and oh my goodness, they earn a lot. They earn a lot of money. They've done really well. It was a really good graduate program, and they, you know, some of them are very, very senior in HSBC, or other organisations have poached them, or they've moved. And so, you know, I have these moments where I look and think, oh my goodness, you could be earning so much money. But I also look at the lifestyle they lead, and you know, they're slaves to the corporate logo and the corporate life. And I like to create things and also sort of see the impact of what's being done. And I think at StepLadder, what is so lovely is, you know, I call our members when they get drawn and I say, hey, here's £10,000 for your property deposit. Now, obviously not giving it to them, they have saved that themselves in their StepLadder circles. But wow, how lovely to be that close to the front line. And actually, you know, when people write Trustpilot reviews, you know that you've played a part in helping them directly. Whereas I can't honestly say if I stayed at HSBC and somebody writes a customer review, I don't think they'd be as nice as our StepLadder reviews, because I think, you know, people don't generally tend to write nice reviews about big banks. But also, how would you feel as a senior manager there? You don't feel that close. You probably wouldn't know that customer. So yeah, I'm definitely a small organization person, and I love innovation. And I think what we've created, and you know, this is really testament to sort of Matt's brilliance at taking a model which has been used around the world and turning it into something that works in the UK, is we've created a genuinely innovative financial product that can really help people.
I just want to explore, if I can, just that little bit about, you clearly are very animated when you talk about the product or the service, the company, the people. And when I say people, I mean the people you work with and the customers that you interact with. I see it in your eyes. And as you know, I've interviewed well over 1,000 people in my career, and I dealt with wealthy people all the time. And I can still remember the very senior HSBC guy. He told me that when I get to 2.5 million, I'm out of here. I hate them. When he got to 5 million, he was still there. And I couldn't convince him that ladder was leaning against the wrong wall, because he was always unhappy. But what can you do? So here's the thing here. You clearly like what you do. What would be your message to someone out there who's doing a job that they think they need to do it for the money, but they're feeling drained emotionally, mentally? In other words, what has doing what you do done for your overall well-being, not just your bank balance?
Oh, such a good question, Jason. This is absolutely my passion in life. Is people should enjoy what they do. You spend so long at work. I'm just aware, a sort of caveat I want to say is, it's just not that easy. I understand if you've got a family and children, and I think I was very lucky when I left my well-paid, stable job, in that, you know, I didn't have a family, didn't have children, and also had a little back pocket of skills, like, oh, do you know what, if nothing works out, I'll go back to teaching aerobics. So I think having something in your back pocket, so you know you're never going to starve, is a great thing.
Yeah.
But also, you know, this is said, it's sort of easy to say when you don't have dependents. So yeah, I think life is too short not to, I mean, at least like what you do, if not love what you do. And I can see how when you get on that corporate ladder, you think, oh, I've just got to, but it's like a treadmill and it's only going to get faster. So I think, you know, it's about just reflecting back and thinking, well, you know, maybe this treadmill needs to stop, and it might be time to enjoy life.
But the point you make there is very well made, is that if you are young without any attachments or dependence, and I speak as a father of two reassuringly expensive daughters, they would say they're a great investment, that you've got to do it when you can, you know, while you can. If you're young is the time when you can take lots of risks. You can still take risks when you're older if you get it right, but you're absolutely right. You grasped the nettle, you thought this is not for me, and you changed courses. So do you want to just explain very simply what StepLadder does? How does it work in really simple terms? How does it help people go from, I've got no chance of ever buying a house, to you can potentially do this?
Love to. So let's take a really simple example. Probably your listeners in London will say, hang on a minute, that's not a real number, but let's just go with it for a simple number. Say you need to raise £10,000 for your property deposit, and you decide you can put away £500 a month. That would take you 20 months saving on your own. What we do at StepLadder is we match you to 19 other people in the same situation. So you join a StepLadder circle of 20 people. And then each month and every month for 20 months, you put aside £500 each month. So that gets you a total of £10,000. What we do though, is each month from the second month, we award the total, so the £10,000, to one member of the circle. So in that way, 19 out of 20 people will receive their £10,000 property deposit faster than if they saved alone.
That's ingenious, isn't it?
It sort of blew my mind when Matt first explained it. I was like, what is this magic? But of course it's not. You're saving, putting aside £10,000, and I must just sort of correct myself there. You will feel like you're saving. Technically, StepLadder is peer-to-peer lending, and so under our regulated status, we're not allowed to call it saving. So you will hear me saying putting aside, but so you're putting aside £500 every month for 20 months, and of course that sounds simple, but if you do it on your own, you might stop, or you might give up for a month, or you might dip into the pot. I think the magic of StepLadder is that it provides you that discipline and that structure and an accountability partner to say, we have built-in flexibility. So you can ring up Jason and say, oh, do you know what? This has come up, that's come up. I actually need to drop out. And we've built in some flexibility so that all works. But the reality is, if you've got to do that, it's a barrier to you doing it, so you'll only do it if you really need to. You won't just do it because you think, oh, Lucy, I really want to go on holiday. I want to give up on this house deposit.
So what we call putting friction in the way of, anything you can do to make it hard to spend, right, and easy to save is good. That's why, I always say, one, never have a credit card, and B, if you've got one, always leave home without it. So that's the old one there. So, okay, that's interesting. So it seems to me it's a very similar concept to what many many families, particularly immigrant families in the UK, and I've got lots of friends from lots of diverse backgrounds. They are, particularly Asian families, are very collective like that. So this has been going on, as you say, in church groups, in different cultures, in different countries all around the world. So this is nothing new. And as long as, obviously, and I'm sure that there's the small print on your website about the peer-to-peer lending and the potential risk or something and how the money's held, and I'm sure that people can look that up in their own time. But what do you think is the single biggest barrier, do you think, to people making use of this kind of concept? Is it because they don't want to admit that they can't do it on their own? Or do you think it's because they think it's too good to be true? Or what do you think will hold people back from making use of this?
Great question. I think the first thing that popped into my mind was awareness, which is why it's always fab to come and talk to people like you on these podcasts, because a lot of people don't know about it. I think secondly, if you do know about it, I think too good to be true is something I've heard so many times. Or certainly in the early days, I did a lot of work on the phones talking to people and getting feedback, and they say, oh, it sounds like a Ponzi scheme. And so it was fantastic when we got our FCA regulation, because I could say, well, actually, the FCA don't regulate companies that are Ponzi schemes. And you can sort of direct people to how you're regulated. And as you say, that's all on our website, explains exactly how we are regulated and how the money is held. And the reality is, a Ponzi scheme is open-ended, and these are closed circles. So this couldn't be a Ponzi scheme. It's 20 people or 10 people or 15 people, whichever sort of size you join. And we actually run circles from as small as £25 just to help people get going. It's obviously not going to get you a property deposit, but it does get you used to this way of putting money aside each month. So I think it's that. I think it's that idea of, is this too good to be true? And I think, we're also a new brand. People don't necessarily know the name StepLadder yet. And so it's a sort of new product and a new brand, which makes it, a bit harder for people to come along and say, oh, what is this and how are you doing this? But the great news is, as more of our members buy houses, we've been featured in the Telegraph and the Sun and various other national newspapers, and we always see a little peak in people applying after that, because that's what people love, stories, don't they? Which is why I think your podcast is great. People want to hear a story, not just this is how it works.
No, okay. Well, I mean, I think anything that's new, I mean, like everyone, you have to check these things out yourself. It's early days for you, but I think the concept sounds interesting. And I think that it certainly seems to me that you're people with some principles, and let's hope it goes really well for you. But before I let you go, I just wondered if you could reflect on, and you seem very young to me, but you said, you've been working for some years, but I just wonder what you wish you'd known, 18, that you know now, with the experience you've had of life, and that you can share with people, because that's always an interesting one, isn't it? Just one or 2 points about money.
Oh, yes. Specifically to do with money?
Well, money and, careers and stuff. Yeah.
Gosh. To do with money, I think make sure you've got some wise people that will advise you. I think that's really important. Don't be afraid to talk about money. I think certainly when I was sort of 18 to kind of 30, people didn't talk about money, and it's becoming more popular, I think, to talk about money. It's not such a debate. I think it's really good to talk about these things. Don't sort of suffer in silence. And in terms of career, if you don't like what you're doing, change the wall the ladder's leaning against, to use your metaphor from earlier. You know, life is too short not to enjoy yourself.
Good. Lucy, it's been lovely speaking to you, and thank you for taking the time out of your busy schedule, talking to customers and changing the world one step ladder at a time. But thanks for coming on. We'll have you on again soon and hear some more super stories. I really appreciate your time.
Thank you, Jason.
Thanks for listening. If you want more money insights, do visit my website at jason-butler.com or connect with me on Twitter or Instagram at JB the Wealthman. See you next time.